Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the definition of shareholders' equity, as we do in each one of these fundamental analysis tutorial videos. I'll give you the actual definition, and then we'll go on to look at some examples and then give you more insight. Shareholders' equity is a company's total assets minus its total liabilities. It could also be stated as a share capital, common and preferred, plus retained earnings minus treasury shares. Shareholders' equity represents the amount by which a company is financed through common and preferred shares. For this example, we're looking at Walmart Stores Incorporated on the balance sheets, where you're going to find the shareholders' equity. We'll simply scroll on down to the third section on the balance sheet. You guys know we've already gone over a lot of these in video, so we'll just be picking up the tutorial where we left off. Shareholders' equity is, of course, broken into multiple subcategories, and then at the very bottom of that you'll see total shareholders' equity, and this is the item we're discussing today. You'll see it's simply an addition, basic math here, adding all these numbers up here to come up with this number here. Total stockholders' equity is often also referred to as book value. That's not quite accurate, but you're going to see it a lot, especially in some other things we'll get into in a moment. So it's important that you understand how book value is actually calculated and how it applies to common shareholders and so forth and so on. So the real thing you need to know about total stockholders' equity is that it's the net worth of a company. You simply take all the total liabilities, start off with the total assets. We'll go up here. You can see we've got total assets, and to take this number here, we scroll on down, we subtract total liabilities, this number right here, and we're left with the total shareholders' equity right here. Now, because this is referred to as book value inaccurately so many times, some people might think that I can simply take this number and divide it by the shares outstanding, and then that would give me the book value per share. That would be inaccurate in many cases. The reason for that is because as a common stockholder, when you're looking at shares outstanding, you're looking at common shares outstanding basically. So this total shareholders' equity actually doesn't just analyze the common stock. It's also talking about preferred stock. So there's another form of equity that's in this and has to be removed from this number in order to give you an accurate perspective of the total stockholder equity applicable to common shareholders. In this particular case, we don't have a number. There's no preferred stock in the Walmart balance sheet here, so it wouldn't make any difference, but in other companies it would make a big difference. Now, as I've already stated, total stockholder equity is often referred to as book value. Let me give you a little bit more logic behind that. Let's assume that you do the math right and you actually subtract the preferred and any other equity that is not applicable to common shareholders, and we simply take that number and we divide it by the shares outstanding. Let's go over to the key statistics section on Yahoo Finance right quick. Let's go over here in key statistics, click on that. And alright, scroll on down here and you'll find we have a book value per share as of the most recent quarter at $22. They simply took that number that I was showing you a moment ago, and they go over here and they get the shares outstanding, and they divide that previous number by the shares outstanding. So they have the total shareholders' equity minus the preferred stock and then equity, and then you divide by the shares outstanding, and that would give you the book value. Now, in the actual definition of book value is net tangible assets. So let's go back right quick and show you that. That's actually one line lower than where we're at right now. You can see that we have the total stockholders' equity here, and then net tangible assets, which is true book value, down here. So that's a bit of a difference there. And when going back to the key statistics, a lot of people will look at a company's book value and say, well, okay, the company's stock is trading below book, so worst case scenario, if the company were to go under, they could pay off all the creditors, and they would still have $22 worth of value per share. It's not actually accurate, because if we just go back there, we can see that total stockholders' equity also includes intangible assets such as goodwill, other intangible assets like patents and copyrights and things of that nature. And these items are not something that you can turn around and sell in a distressed situation in most cases. And sometimes you will find that the goodwill and items like that will be overstated anyway. So there's a portion of this total stockholders' equity that is including intangible assets, and so that's why net tangible assets gives a safer valuation in that scenario, in that liquidation scenario, than total stockholders' equity does. So just keep that in mind, okay? And now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.